That's some fantastic return on invested capital numbers and some very strong stability there. So yeah, looking good so far, Costco, I like it. Hey everyone, welcome back. Now, what I'm trying to do here on my channel is explain that investing in the stock market is more than just buying a company you love and just inevitably watching it go up. There's a lot of people who are going to get crushed by this mentality, and I'm trying to avoid it. Maybe you're a little concerned that something just doesn't feel right around all the hype and all the other videos on Bitcoin or Tesla or whatever it is. Well, you're not alone. My strategy is to look at an investment based on its financials, just like we would if we wanted to buy an entire company and run it ourselves. Today I'm going to do a quick high-level valuation of Costco to see whether it's worth spending some serious time researching. Now, I'm not doing a full analysis here. I don't have the time to seriously analyze the thousands of companies that are out there, so I'm trying to filter them out based on this method. And even if the company passes or fails this quick valuation, it doesn't make it a good or a bad investment. It's just a way to motivate us to whether we should go onwards and do further research into the company. So anyway, just sit back and follow along to learn how to do this yourself. Plus, by the end of the video, we will have a target buy price. This is part art and part science anyway, and the more practice we do, the better we're going to get. Okay, so to analyze Costco today, I'm going to do my 9-point checklist, and then I'm going to give you my opinion at the end. So Costco over the past 20, 30 years has been a fantastic investment, as you can see here by this stock graph. Look, the returns here are, I think it's about 20x or so over that period of time. Look, there's some really interesting people who have talked about Costco recently that I've been reading about. Nick Sleep in particular. He talks about Costco being what he calls a scaled economy shares. So as the company gets bigger, they keep the prices low and pass a lot of their savings because they can buy in bigger quantities. They pass that saving on to the consumer who returns back to the shop because they know they're getting the best deal. And it's been able to scale throughout America really, really efficiently. They're now a $200 billion market cap company, and they're starting to spread into China. So there's some interesting stuff about Costco. Now, to analyze the company from this high level, I'm going to go revenue growth first. So to look at revenue growth over the past sort of 5-10 years, we've gone from 88 billion back in 2011 to 180 odd billion now. So there's definitely some strong growth there for the revenue. So that's great. Then we go look at the gross margins. Now, gross margins, I generally like to see as high gross margins as possible because it allows the company a bit of leeway for problems in the business or whatever to happen. But Costco's business, being a supermarket, being a physical retailer, their margins are going to be slim, and they've had this ability over a long period of time, as we can see here with the gross margins, to have very, very stable gross margins, even though it's low at about 13%. Look, I'm gonna give it a cross because although it's stable and it's actually part of the business model to keep these margins really low because they pass the savings on to the consumer, it's just, I like seeing bigger gross margins. It just means that things can go wrong in the business and they can get themselves out of a bit of trouble because they're making good money. Look, if you know anything about Costco, it's probably not a big deal, but anyway, I'm gonna give it a cross, but whatever. All right, return on invested capital. Now, the return on invested capital for Costco has been double digits all the way through for the last 10 years, starting at 11, there's 14s in here, it's been 17 of late. That's some fantastic return on invested capital numbers and some very strong stability there. So yeah, looking good so far, Costco, I like it. Debt levels, all right, so we're gonna look at the current ratio. So current ratio is really just essentially the short-term debt that the company has. If there's any problems that the company's going to face in that short term, we don't really want them issuing more debt or issuing more shares or anything like that. So I have a look at the current ratio, and it's currently at a 1. I like a 1.5 and higher. The reason I like it that high is because it just gives them a bit of buffer. 1 means they've got the exact amount of assets that they need to cover their liabilities. It's probably okay. It's just not that, it's not, from my point of view, not that safe. I prefer this, but look, if I go back through time, it's never really been anywhere near 1.5. It's always been between 0.99 and 1.2. This is a very predictable, stable business. yeah, the debt to equity is still reasonably low. It's probably okay to give them a tick here. I'm going to give them a cross just because I like to chase that 1.5 number. But looking through it a little bit more, it's probably not a problem at all. Okay, free cash flow. So free cash flow is the money left over for the owners of the business, essentially. They can pay dividends, buy back shares, expand, do all sorts of things with their free cash flow. And free cash flow has been growing, and the last year it's actually jumped, nearly doubled from, looks like 3.5 billion to about 6 billion, nearly 7 billion now. So interesting to see. There's been a lot of growth just recently of their free cash flow. So maybe they've become a little bit more efficient somewhere. Not quite sure exactly, but yeah, good growth there for the free cash flow. Okay, now turning over to the brokerage accounts that I use to actually buy the shares. Well, I like stable brokerage accounts with long history because, look, not all brokerage accounts are made even. My family and a lot of my friends got burnt in Australia investing in a inferior brokerage company. It went bankrupt and it's frozen up all of their assets, and they haven't been able to touch it for years now. They should get their money back, well, a lot of it, but it's been a massive nightmare for them. And I worry something could potentially happen like that with Robinhood. I don't know. I'm not going to speculate on that, but I just like stable, very reputable companies here for my brokerage accounts. Plus, Interactive Brokers and Saxo give you access to international markets, and that's important with investing. You need to access the best companies in the world, and I think you need to do that. Robinhood and stuff like that only give you American companies. Interactive Brokers have probably the lowest fees out there too, and I really highly recommend. I have links in my description for both these companies, for both these brokerage accounts. They are affiliate links, but I'm only supporting them because I use these companies. All right, shares outstanding. Shares outstanding is really important because we don't want this number to be getting bigger because it means we're getting diluted, and that's a bad thing. And we want this number to hopefully be stable, if not getting smaller. And it has been very, very slightly growing. It's actually been pretty stable. I would say it was 10 years ago, it was 443 million. Now it's 444 million. That's stable. I'm going to give that a tick. That hasn't really changed at all. Okay, inside of ownership. Now, being a massive company, we're probably not going to see a founder still part of the company in a big way, but we want to see the management team who are running the business now. We want to see their ownership in the company greater than their compensation, hopefully by about 10 times. And if we look at the president's getting paid about $8 million a year, but they own $146 million in shares. That's perfect. That's all the alignment I'm really happy to see here. It also looks like the leadership team, I think all of them own pretty big stakes in the company. Somewhere all between $5 and $150 million of the company. They've definitely got their incentives aligned here for Costco. I'm really happy with that. That's really all I needed to see. Super investors. So I'm not that smart and I'm going to make mistakes. But if someone who is smarter than me, who's been doing this for decades, has invested in a company, well, that's going to give me a lot more conviction. So I really like to see someone very smart, like Thomas Gaynor at Markel Asset Management, invested in the company. And as I can see here in Data Roma, Tom Gaynor has a piece of the company. So look, I'm happy. There's a couple of other super investors here as well. I'm not as familiar with these guys, but yeah, just wanted to see someone I recognized and respect invested in the company. Great, that's another tick there. Price is the most important part of this. Now, no matter what happens, a good and bad investment is made because of the price that we're going to pay. We're not going to spend $20 million on a Ferrari. That's insane. It's probably only worth $250,000. So to work out the value of the company and what we should actually pay for it, what I'm going to do is I'm going to use my intrinsic value calculator, and I've actually gone ahead and done this already. So I'm using the average growth rates for the past 5 or 6 years, and I'm just going to extend that out over the next 5 years. I'm expanding. They're going to keep opening up new retail locations throughout China, hopefully. Maybe this grows a bit quicker. Maybe it grows a little slower. I'll tinker around with this a little bit later. But the averages have over the last 10 years been about this 10% number. So I'm happy to keep that growing at about that rate. Now, my return on investment goal is very, very high at 30%. That's the discount rate I'm going to use. To get a fair value, what I do is I just change that to 10, and that gives me a fair value of $333. But I don't want to buy it at fair value. I want not only a big margin of safety, but I'm looking for returns somewhere in the 20% range. So that's why I start my return on investment goal at 30%, sort of like a trying to shoot for the stars, but I might land on the moon kind of thing. That's sort of why I'm using 30%. Now, the multiple I can sell it for is these growth rates. It's a large company. You pay up for growth, but the growth here is pretty stable at about 10%. That's only worthy of a pretty standard industry average 15 multiple. The free cash flow number here is 6.9 billion. The shares outstanding is about 0.4 billion. Then I just grab the total cash and the total debt number in billions as well. And it's saying that the buy price is around about $100 with these numbers. Now, let's tinker around here and say, okay, maybe it expands through China really rapidly at 15% and then 10%. And maybe I don't need quite to be so aggressive and I'm gonna only get 22% return on investment goal. So then I would want to buy it closer to $200. So if I go and have a look at the actual share price, we've got, well, $444. Now, my first buy price was that I really would probably be interested in, it was $100. And then even just being a lot more aggressive with my numbers, it got me to $200. We're at $444. It's not even close. Okay, this is way overvalued. So my opinion on this so far is that, look, it's probably a pretty rock solid company here. It's probably a slow grower though. Those gross margins are low, but it's sort of part of their business model, that economies of scale shared that Nick Sleep would talk about. It is in a very boring industry, which I actually like because a lot of people neglect the boring industries. Now we've got Nick Sleep, who I talked about earlier. He's a big investor in Costco. Thomas Gaynor as well at Markel. I respect these guys a lot. So good to see those super investors invested. But from my point of view, it is way overvalued at the moment. 15% return on investment. Let me just do that. I'm going to put in here 15%, put this back down to 10. Oh, it's not even, I'm not even going to get a 15% return on my investment. It's probably more like 8 or 10%. Yeah, it's nowhere near a good price at the moment. I'm not even really, I would still be reluctant at probably $200, let alone $444. Now, I hope you've enjoyed this high-level analysis of Costco today. If you did enjoy this and want to see future videos, make sure you hit subscribe before you leave, and I will see you next time.